What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday. It's time for the weekend. It's time to party. And it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we had Google stock going up over 10%. Amazon stock caught a bid, but we kicked things off like we always do with Meta Platforms. Started the week at 232, drifted sideways to finish the week at 233.81. OpenAI CEO Sam Altman is saying that Meta could be a, quote, real player in AI. I didn't know Mr. Sam Altman was all of a sudden the kingmaker when it comes to AI. I tell you what, just a couple of weeks ago, maybe even a few months ago at this point, Meta's large language model was actually leaked out and has essentially kind of become an open source piece of software, and it really did show that Meta did have a lot of capabilities here. And we've said it many times here on the channel. The company obviously has the user base. It has a tremendous amount of data, and not only that, but I believe Mark Zuckerberg is a very, very competent leader of the company. And if he continues to focus on AI, this is a company that not only will create a great product, but probably monetize it better than most other competitors. Meta announced ad expansions on Reels as it looks to boost its monetization. Now, the interesting thing here is it looks like they're going to do some revenue sharing with the creators that make these Reels. So you're going to be able to produce a Reel. The more viral it goes, the more interactions, and the more that Reel is played, obviously the more ads that get served on it. And they're going, similar to YouTube, they're going to share some of that revenue with the creators, which I think is a positive sign. Now, moving on to Apple. Started the week at 172. Like Meta, just drifted sideways to finish the week flat. Apple continues its emerging market push as it's opened up its first store in the country of India. It's obviously shifting a lot of its manufacturing, or not a lot, but some of its manufacturing to the country of India. And it now just announced its first online store in the country of Vietnam. Now, I think the one thing with Apple, as it moves into these other regions, are they still going to be able to charge $1,000, $1,200, $1,300 phones? Is that going to be the upper band of demand for the devices in those countries? Or are they going to have to, go further down the price scale to get wide adoption? We'll see. That to me is maybe something that Apple is continuing to figure out, but also just very interesting from a marketing perspective, but obviously a shareholder as well, to see the device price range that Apple decides to go into when it goes into these new markets. Apple's partner Foxconn says that its full year visibility when it comes to revenues and profits remains, quote, limited, largely due to economic uncertainty. And I think that's that's kind of the conversation we're all having as investors right now, because a lot of these stocks are up 30, 40. If you look at Meta and NVIDIA, these stocks are up 100% year to date, not off the lows. We're talking about just year to date. Some of these stocks are up 30, 40, 50, 90%. And so as we start to look into the back half of the year, what are these companies going to have to do to not only hold the gains that we've had through the first 4 or 5 months of the year, but maybe even be able to potentially expand them and continue to outperform the back half of the year? Tell you what, going to be kind of difficult. And if Foxconn believes there is limited visibility into the back half of the year, investors are going to be scratching their head at the current time. Now, Apple is said to raise $5 billion in a new 5-part debt offering. This is to fund the dividend increase that the company just recently had and the ongoing $90 billion buyback. I tell you what, $5 billion to a $2 trillion company is not a whole lot of money. Amazon started the week at 105, up nearly 5% to close the week at 110 as the momentum is back on Amazon's share price. The company is facing a unionization push in the country of UK. This appears to cover we're looking maybe like around 5,000 workers. About 2,600 voted in favor of joining a union, and about 2,100 workers opposed the measure. And this will just continue Amazon's push. At some point, they need to start replacing large amounts of their hourly employees with automation techniques. The Rivian CEO sees a partnership possibilities beyond Amazon as the company, I believe, reported earnings this week. The company's share price spiked back up to 15, but has since round tripped and all the way back down to $13. I have yet to see any of these electric vans out here in California, where I think most of the piloting is taking place. iRobot stock Reels After a wider than expected loss and a sharp revenue decline, the shares fell off as well. Shares were trading up nearly $40. Now I'm seeing iRobot shares down at $33 and some change. The company noted that certain large orders from an e-tailer customer, could potentially be Amazon, were pushed back into the second quarter of this year, and that's what really drove down revenues. This deal for the $1 billion and some change company, obviously pending regulatory approval. Amazon looking to offer original videos to other outlets. They're already doing this to a certain degree. They bought MGM Studios, I believe, about a year ago, about a $9.5 billion transaction. They released, or they were behind that Michael Jordan or that Air Jordan movie that was playing in theaters, and now I think you can watch it on Amazon Prime. It just makes sense when you have access to all of that own content to release it on other partners. And look, when we look at kind of the streaming business out there, that is probably the most profitable business model in all of streaming, is having the content and licensing it to Hulu or Netflix or Apple or Paramount. It doesn't appear anybody has figured out, other than Netflix, which we'll talk about here in a second, none of them have figured out how to actually make money in the streaming business. Now, speaking of Netflix, this stock started the week at $326, up nearly 4%, actually over 4%. Finished the week very close to $340 per share. Netflix reportedly eyeing a $300 million cut to cost amid an ongoing profit focus. Gotta really respect Netflix, okay? We saw Disney earnings this week, still losing money in that kind of Disney Plus offering. In fact, they're going to take a write-down in that business unit over the next couple of quarters. This company already profitable with their streaming unit and continues to cut costs, very disciplined focused over at Netflix. You gotta respect that as a shareholder. Moving on to NVIDIA, started the week at $285, drifted down just a little bit, finished the week at $283. AMD led the chip sector lower as Morgan Stanley sees, quote, deflation in the semiconductor economy. However, this headline is very deceptive in my opinion. Deflation means that prices are, or your purchasing power essentially becomes greater, or in the case of a sector, that prices are actually going to contract. I don't necessarily think that's the case. I think what we are seeing in the chip sector is there's a little bit of a shift. Over the past decade or so, you've seen obviously the rise of cloud computing with AWS, Azure, and Google more prominently, and then you have Oracle and IBM and a few other players on the side. And a lot of that had to do with kind of database. It had to do with a lot of storage. So you were storing data, whether it was user data, whether it was database type data. Well, now we're shifting over into the era of AI, where you're doing a lot of this like large language model training, and you're training these computers. And that's actually kind of a different computer stack, if I understand it. Look, I don't have a computer science degree, but I've been doing a fair amount of research in this. These are somewhat different disciplines when we look at cloud. And so, yes, I think we're going to see some companies like NVIDIA, at least in the near term, be able to hold pricing on those very valuable and very much in-demand GPUs, but some of the other server software and server infrastructure might not have the higher profit margins as we move forward. This is a very fluid situation and probably one of the most interesting sectors to follow from a news flow perspective. Moving on to Google, and speaking of moving, this stock started the week at 106, up nearly 11% to finish the week at 117 and some change. The company put their AI reinvention at center stage at a developer conference. Now, I watched this entire thing. It was streaming here on YouTube, and I tell you what, they've got a lot of computer geeks and computer science nerds. If they had anybody with an ounce of charisma at Google, well, I tell you what, the stock probably up 20%. They announced some very interesting things. We won't necessarily get into all of them here on the show. There's plenty of people that do these types of things on YouTube and do it far better than I am. I think from a profit perspective, probably the most interesting thing that they showed off was the AI enhancements to Google search. I am showing a little bit of kind of a background video to that. So you're searching for a bike and it gives you much more rich detail about these things. And these are all going to be sponsored results, okay? All of this stuff is going to be a pay-per-click ad. What we saw this week, and there's been a lot of questions, including myself, is what's going to happen to that traditional kind of search query now that you've got these AI chat bots and like OpenAI, and you've got Google's Bard as kind of an experiment project. Well, what we are seeing is it's likely going to enhance and make a lot of search results probably even richer and even better and probably even more engaging from a click perspective. Yes, there's going to be some search results that won't serve ads anymore or won't be as profitable from kind of an ad perspective, but anything related to shopping and products, I actually think I saw enough in Google's presentation to lead me to believe that this company's core business is probably going to accelerate in the coming years. Now, the Texas Attorney General announced an $8 million settlement with Google over deceptive advertising related to the Pixel 4 smartphone several years ago. $8 million to Google is about like $8 to you and I. New York Times receiving $100 million as a part of its expansion with Google on a content deal. So Google is going to take New York Times content in their news feed, if you will, and feed it into maybe search results and other parts of the company. And they, or the New York Times, is going to get $100 million for this. Now, little deceptive because Google is behind the scenes on New York Times serving a lot of the ads, and I believe they're running some of their cloud infrastructure as well. So while Google is paying them $100 million, the New York Times is turning around and making Google money at the same time. Moving on to Microsoft, start of the week at 308 and some change, ended the week right there, basically flat at 308, nearly $309 per share. Microsoft set to defend its Activision deal in United States court amid competition worries. As we speak, the company is in a federal courtroom out here in San Francisco, making its case to acquire Activision Blizzard. Other news on that deal is the UK regulator says that Microsoft cannot increase an Activision stake, so they can't, if they get barred from buying the company outright, they can't go get a majority position. Same sense, Activision can't turn around and invest in Microsoft. Tell you what, regulators have pumped the brakes on this. However, the EU is set to approve the Microsoft purchase of Activision, although we saw this a few weeks ago with the UK. So we'll wait until one of these countries actually approve it to sign off on it. Now, Microsoft's reportedly skipping raises and full-time employee bonuses for the upcoming year. This relates largely to upper management and not necessarily kind of that, quote, entry-level employees. So this could actually end up being somewhat mildly tangible to the cash flow statement, although you got a $2.3 trillion company. Those bonuses tend to be a rounding error. Now, Microsoft said to be keen on getting that Firefox search deal as that Google contract expires. Now, the Firefox browser has largely been dominated over the past couple of years by Google's Chrome and to a lesser degree Safari, but Microsoft might jump in there. Moving on to Tesla, start of the week at 171, slid down about 2%. Finished the week at about $168. Elon Musk officially named an NBC Universal ad executive as the new Twitter CEO. However, Elon Musk appears to be staying on as essentially the owner of the company, but also a chief technical officer. The stock gain, we're talking about Tesla, after the company announced, again, another round of price hikes on some of its vehicles, and some shareholders believing that maybe a Twitter distraction could now be over with a new CEO. The other thing is this ad executive, which is taking a lot of heat on Twitter. She has ties to the World Economic Forum and is viewed as kind of a far left liberal, which doesn't really bother me, but to the free speech advocates out there, the World Economic Forum and far left liberals don't tend to mix well. We'll see what happens here. However, she is an ad executive, and so she could bring a lot of revenue, and it could allow Elon Musk to keep retaining his Tesla shares that he is awarded. Now, Tesla breaks ground on a lithium refinery in Texas. This is a $375 million facility in Corpus Christi, Texas. This is going to give Tesla very strong vertical integration, as it will be the only automaker refining its own lithium here in the United States. Moving on to the technical segment of the show, the S&P 500 is flagging out, and we've been doing this for several weeks now. The stock market can't catch a bid and push higher to higher highs, but at the same time, there is an absence of sellers, and we're not retesting, at the very least, the bottom of this channel or lows that we made back in March. Until you get a move one side or the other, it's actually pretty hard to determine which way these markets want to break. I'm assuming over the next couple of weeks, we'll get an indication of the direction. Moving on to Meta, found some resistance up here at 245, pulled back to 233. We've seen this numerous times on this like skyscraper type of uptrend. The stock has pulled back numerous times, but has then resumed the rally higher, oftentimes spurred by earnings. Now, we're a ways away. We're all the way into the month of July until we get some earnings news out of Meta. So it could be an AI news, could be other types of news that could drive this stock higher. I think no matter what happens with this stock is you can buy these pullbacks. I think most of us are looking forward to maybe a sizable one. Pullbacks to demands down here at 183. A really exciting pullback would be to close this gap all the way down to 155. That would feel painful for a lot of people, but in my opinion would set up a much shallower uptrend and one that's probably a little bit more sustainable than the vertical one that we've been experiencing with Meta. Now, speaking of vertical, Apple also has gone vertical. We talked about it last week, maybe even several weeks here on the show. You've got a hard level of resistance up here, exactly where the stock is right now. This is also another example of why the S&P 500, which is largely dominated by kind of mega cap tech in terms of its weighting, you need green candles to push this higher in order to get this market to break to the upside. Apple breaks to the upside, you're probably testing the highs up here at 182. Further momentum could carry you easily into the 190s, maybe as high as $200 on this one. A break at these levels, not alarming considering the rapid rise. You have demand for the shares down here at 158, more demand at 151, and then really the exciting pullback would be the top of the green box down here to 137. We'll see if that materializes over the coming weeks. Now, Amazon's in a different position, very similar to Google. Amazon is in a slightly different scenario. It is not at the top of the range. It is not meeting overhead resistance like Meta, like Apple, like NVIDIA. This stock has actually got some airspace above it. It is just walking along this upper trend line, making a series of higher highs, higher lows. There is some consolidation between where the stock is now up to 142. Some news-driven events could drive this one up into that range. I'd actually be a seller of this stock as you start to approach 140. Now, moving on to Netflix, actually had a nice, really kind of micro trend rebound. We talked about how this stock's made a succession of beautiful higher highs, higher lows, failed over the past couple of weeks to do that, but has found a bid and some support. You'd like to see this one rally back up into the 390s to confirm that this uptrend is intact. A break below that could create some buying opportunities. The first one I'd be interested when it comes to Netflix would be down here at about $260. Now, moving on to NVIDIA, also very similar to the S&P 500. Now you've got, I mean, you're on this like 100% rally off of the lows. It's even bigger than that. You're looking at like nearly a 300% rally from the lows. A stock just has to take a breather at some point, especially when you're talking about like a $700 billion company. I mean, we're talking about like a micro cap stock. So this one's got to take a breath. It is taking a breath at this area. A push higher would easily test the highs up here at 340. Any pullback in this one, you're on such a monster uptrend. A pullback right here to 230, I actually think could probably be bought. Now, moving on to Google, breakout alert. This is what happens. Man, you had this big move on the stock as we started the week, like we talked about, down here at 107. Boom, broke to the upside, broke through all this consolidation area. And I tell you what, if it can hold this level at about 117, 117 is currently resistance. A continued move higher, 117 becomes support, but right now we have to assume 117 is resistance. Pullbacks to 110, I guess, could be bought. Further than that, 106, even deeper than that, back to 100. These can be bought as you'd be making higher lows, higher highs. Again, folks, very simple technical analysis, and I think one that makes it, especially if you're kind of a newer investor and one that doesn't want to take a lot of risk, you are in this stock chart is an uptrend, okay? Higher lows, higher highs. You actually can buy the dip when it comes to that stock formation. Where you get in trouble as an investor is when you buy the dip in a downtrend. And so pretty much all of these stocks minus Tesla are actually in a shorter term uptrend. So you're actually looking to buy them on the pullbacks. Now, Microsoft also was in a downtrend, now is in an uptrend, very steep uptrend, has stalled out here in kind of the 310 range. And we're trying to decide, is this going to make a Google-like move and blast off to the top? Or is this the end of the rally and we're going to see a pullback? Would I be excited about buying Microsoft shares at this level? Absolutely not. Would I be excited if we get a pullback in this one? Absolutely, because again, we're making higher highs, higher lows. That is actually when you pull the trigger on a buy. Now, Tesla is in a very weird position from a technical perspective. Intermediate term, you're making a series of lower highs. More recently, we've kind of turned things around here. I guess this could materialize at some point, but you're also making lower highs here with this stock. I think the path of least resistance with Tesla continues to be lower. As again, we talked about it during the company, when the company had earnings. They're playing a different game. They are playing a lower margin game. It's going to put pressure on their competitors, but it's going to keep those gigafactories, which they've invested billions of dollars in. It's going to keep them at least at full capacity or very close to that. They're going to continue to pull down pricing if they have to. And the company long-term believes that they're going to have a full autonomous option for a lot of that cars, and that is going to unlock a lot of value in that fleet of vehicles. That is the company's belief. And if you don't believe it, I don't blame you. But if you do think there is some opportunity there, I tell you what, a $530 billion valuation on a company that's still growing its revenues at a double-digit clip and could eventually expand margins, or will likely expand margins in the future, might be a decent option. One last earnings note is NVIDIA reports their earnings 12 days from now on the 24th, and that essentially wraps up earnings season. Some of you may have noticed there's been some slowdown in terms of the earnings videos that we've posted. I didn't post AMD. I didn't do PayPal. There is going to be some changes here on the channel. One thing that is likely for certain is the FAANG Stock Recap Show will always air here on Fridays. It will be free, and the format will remain unchanged. I'm in the talks as we speak with a publisher to potentially bring a large amount of my research over to their platform. In fact, I'm in the very final stages of finalizing something there. If something happens there and that doesn't happen to work out, or if it falls through, I am going to be making some changes here on the channel. There's going to be a subscriber option. I'm going to try to produce more in-depth videos that are not meant for the algorithm, that are not short or not limited to YouTube, but actually is directed at a very serious group of investors, and we'll announce that if and when that option has to come. But in the meantime, I'm doing a lot of research in the background because, again, I'm in the final stages of potentially bringing my research to another publishing group here in the next couple of weeks. I will let you know once I know for certain what is going on. But again, one thing remains for sure is we'll join you like we always do here every Friday. And I wish you, again, like I always do, a safe weekend, a fun weekend. Go Lakers, and good luck with your investments.